Dale, welcome back to F.A.C.E. Really looking forward to talking to you. The last time you were on, grains were at lows and there was a crop report, if my memory serves me correctly. And
Hello.
Hi, how are you, Dale?
Hey, how are you doing?
Welcome back to F.A.C.E., my friend.
Yeah, well, I put a face on a face, right?
Yeah, so you remember how to share your screen here? Or we weren't on
Not really,
Zoom?
because that was long enough ago and a lot of water
Okay.
under the bridge. And oh yeah, I got home late last night.
All right, buddy.
I was
There's a
in
green,
Indy all last week.
yeah, there's a green box that says share, and you
You
just
are viewing. Yeah, it doesn't say share. Let's see, view
you
options.
just hover your mouse around the menu, it'll appear a green box that says
Yeah,
share.
up at the top.
Yeah,
Yeah, request remote control. Nope, that doesn't
no,
work.
no, it's share. See, for
Oh,
me,
down on the bottom. I
yeah,
see
okay,
where we're at here.
okay. You just click share and
You
grab
cannot
it.
start screen share while others are.
Yeah, just start it. Choose the
I did
screen you want to
okay.
show.
Still doesn't give it to me.
Dale, I'm sorry to interrupt. Do
Share
I
while others participant is sharing.
do I need to stop my sharing? Yes, I believe. Let
All
me
right,
let me
try
try.
do that. Okay, try it now,
Okay,
Dale.
There we go.
working now? Not yet.
So it'll say
It said
after.
share. Let's see
Here
what
we
we.
go.
Okay, here we
You're
go.
good now.
Okay,
We see the soybean yield. Thank you, Andre.
So now we are sharing.
Right, and we're talking about you have U.S. soybean yields, and I think you were constructive. I remember when we were talking, Dale, bullish sentiment, or what I followed, DSI, had all the grains in like, the tens or sub 10, and we've had a huge rally. Was the rally more based upon the crop report and yields, or the fact that China, because of their problem with their pork population, uh, has to come in and buy agricultural products from us, even though there's a trade war going on?
You can talk about it being all of the, all of the same at this particular moment in time. The crop here in the U.S. is probably the big thing that's been playing out here during the summer months themselves, simply because of, into the weather we had in the spring, which it seemed like the Midwest, we were continuing to make our rowboats bigger to stay afloat at this point. And so we got corn and soybeans both planted extremely late this year. In fact, in a lot of places, the latest on record. We can step back and we can talk about, the amount of acres that didn't get planted, the record high we'd ever had in prevent plant acres, which is an crop insurance designation where a producer gets paid a partial payment if Mother Nature precludes him from planting acreage. And this year they hit a little over 19 million, let's just say 20 million acres. And the prior record high we had was just over 9 million acres from back in 2009 or 10. So, it just gives people an idea of, how wet it was this year and how late things got planted. And that has a lot of ramifications into both corn and soybean crop. And I'm showing you here some internal detail of USDA reports themselves, because with USDA reports that we get monthly starting in August and in September on both corn and beans, we start seeing some internal details of what their crop estimates are, and to kind of give the people out there a bit of a feel for that. The USDA will survey, somewhere on order of about 20, 30,000 producers across the Midwest on their ideas on yield. But then starting at September, they have a cadre of people that go out to 11 in fields in 11 states for soybeans, 10 for corn, and they actually collect data from the yield, and then they put both of those data streams together to come up with a thing. But I'm showing here the soybean pod count, and you can see, you know, from back since 2010, and I left out 2012 because that was a drought year. You know, we had the pod count itself start out, and it's still down near the lowest range we've had here in the last 10 years, let's say. And that,
well, we're seeing the yield, U.S. yield chart right now. We're not.
well, this is
the pod count is which line?
I'm showing, in other words, I'm showing something a little different. Now the pod count is down, really down near the bottom. You should be seeing a
U.S. soybean yield chart is the title.
You're seeing something different than what I'm looking at then.
Well, you shared a different screen then, so unshare.
Now, wait a minute. Let me go back into this then.
Okay, there's pod count.
Yeah, there's the pod count. And what we're doing here is with the pod count, as I said, you know, we're down near the lowest end of the range. And to go along with that, when we start doing things, we end up with a pod weight per se, which we started out near record high. Of course, farmer expectations about yield were not extremely bad when we started out the year, but we were down quite a bit from where we were. But it looks like moving ahead on tradition in both pod weights and pod counts that, you know, we're going to home in on a yield that's somewhere in the vicinity of about 46 bushels to the acre. If we go back to that prior graphic that you were seeing, let me hit share here. This one here was soybean yield. The USDA right now is down at 46.9, and it looks like we could head it down somewhere to about 46 bushel. A lot of people are really surprised in looking at this year, and that everybody back in the summer course, when you're in the middle of a crop problem, everybody gets what I'll call extremely negative about what the production potential is really going to be, and they really overly
pessimistic about it.
Yeah, they got overly pessimistic about it back in the summer months themselves, and we're going to be down. I have a different trend than a lot of people. Scott Irwin at the University of Illinois had put together a curvilinear trend on this based on yield experience. His trend yield's up near 49.9, which mine this year is for 2019 is 49.7. So they come together pretty well. But I found that through the years of soybean yields, you can see here the 70s and early 80s, we were kind of flatlined with a slight upward bias. And then we took a stair step up in the mid 80s. And again, about the same trend, carried that all the way into the early 2000s, had another bump up. But what's happened with soybeans, it looks like we bring a lot of genetics in at one time and have a bit of a step up and then go on to a new trend. And we did that same thing back in 2012, 2013. And so we're actually going to end up in here somewhere, it looks like probably about, and the blue lines here are 10% below trend, or at least below my trend. So we're going to end up somewhere around 8-9% below trend, which probably is something that's pretty important. And if we go back here, I'm pointing out right now 1993, which was another year where we had a tremendous flood in the Midwest, and you can see that we got down roughly about 9% below trend, but didn't get below that. So it looks to me like we've already fully built in, you know, the ramifications of soybean yield itself. If we go back and we talk about this same particular set of data as far as corn is concerned, we can go down and we can talk about ear counts, which are a little bit easier to calculate starting out early in the growing season. And you can see we're probably going to see it drop off a little bit, but ear counts have a tendency to generally moved down a little bit, not a whole lot from this point forward, although with some of the wind and the weather problems we're having here at harvest, we probably will see it drop off a little bit. But implied ear weight on a normal year.
So was this a double whammy for the farming industry of having lower yields and then having a big market being disrupted by China? And is there a lot of duress because of this in the agricultural community?
In the soybean complex, it is, but when you get away from soybeans, if we look at corn, or we could go talk about wheat even, you know, we don't see that it really has a huge impact, because China itself is not a big buyer of wheat anywhere in the world. In fact, when you look at China, as far as wheat, China controls 1/2 of the world wheat inventory in the world. 1/2.
Well, that's what I'm talking about. Okay, so Angie talked about that. Well, you know Angie, and that China was stockpiling wheat. So they have enough. Their bins are full. They have half of the world above ground or harvested wheat supply, and they don't need to buy anymore.
To put that wheat supply that China holds in a perspective,
yeah,
they at the end of quote unquote what we call a marketing year, you know, from harvest, you know, forward to the next harvest. At the end of a marketing year, they have one whole crop in inventory as they get ready to harvest a new crop.
Okay.
So
all right.
Essentially, when they harvest their new crop wheat, they have 2 crops in the bin. That's how much wheat they are holding in the bin. In terms
Sounds like Joseph in Egypt.
Oh, yeah. Yeah.
They have the Joseph strategy going on. What are they expecting? Some problems with food delivery and not being able to feed their population? Is that why they're stockpiling it?
To go back into this, they did this once before, back in the 1990s, and they ended up with a huge supply of wheat and even of corn in the bin in China itself. And I think part of the reason that you get into China and find their willingness to stockpile inventory is really tied to the fact the Communist Party really is a very small percentage of their population, and you don't want to have a population that has to go without food when they overwhelm the numbers of you. But along with China, you know, we have to understand this is a country, even on a smaller personal level, this is a country that has experienced famine. Okay. And that's something that we here in the U.S. just cannot envision. Yes, we have crop problems, and yes, we have shortages.
Yeah, you had to be around for the Dust Bowl, and most people weren't around for the Dust Bowl.
Well, even beyond that, people didn't largely go hungry.
Okay.
Yeah, I was hungry, but when I look at the population as a whole, not hungry. People could always find some food to eat, whether it was in a soup kitchen or whatever, you know. And
okay.
I may have not had as nice of a diet as what I was used to, but I still had food to eat. And so with that, you know, people have never gone hungry, but China has actually known famine, as other parts of the world has experienced. I think today, you know, with even farming practices in China, there's a lot less risk in that. So I don't know that that's...
So it's kind of like the Germans worried about like the Reichsmark in the 30s. So they have to stay tight as possible because they don't want to relive another experience where there was a wheelbarrow full of their currency and people would dump out the wheelbarrow and take the wheelbarrow.
Funny you should mention that, given yesterday in the election we had in Argentina.
Oh, okay. Yeah, I know you follow a lot of South American developments because they're in they're big players in the grain game. What happened in Argentina?
They had a presidential election yesterday, and Macri, who was kind of a populist, something in the vein of Trump, but more of a conservative individual, really.
Yeah.
He got booted out of office after one term. and they brought back in, I don't remember his name, but his vice president is the woman that had been president before McRae,
Oh God.
Kirchner. And,
Yeah,
and
okay.
basically they are Peronist. And if you
Okay.
look back at the Argentine peso, you know, it's just been a perpetual slide, you know, and Macri had finally put the brakes on it and seemed to have it under some control. But as he was losing favor with the populace over the last number of months, the peso had declined quite sharply again. And so, you know, things are getting increasingly worse. And I think the peso is going to run into some problems going forward. You know, it's right now, I haven't seen, I was gone last week, so I kind of missed out on some details, but we're over 40-1 as far as peso to the dollar is concerned. You know, you're talking about its values about 2 cents or something of that nature.
Those people, you know,
So,
I mean, they've had plenty of experience to know not to hold their domestic currency, but I'm sure there are many that are suffering there, like people that are suffering in Venezuela. I don't think it's as bad in Brazil, but that whole area, Dale, have you ever seen it? I know it has a spotty history with, you know, debt defaults, all of them. But have you ever seen that region as toxic as far as the economic problems as you do now?
in Argentina, I'd say you're right. Brazil is probably one of the countries. Uruguay and Paraguay seem to be relatively stable as well. Bolsonaro, that's president of Brazil at the moment, he's
At the moment.
populist and again somewhat conservative, and he seems to have a fairly good following, and I think liked pretty well. And they are slowly seemingly making some progress down in Brazil, versus Argentina seems to just continue to lurch from one side to the other down there. And so with that, you know, I don't know how I would stay as a citizen of Argentina and stay for years. In fact, I know here in central Illinois, in fact, a couple of people that were Argentines that have gotten married to U.S. people and were glad to get out of the country. And a couple of them ended up settling down here, and they go, boy, you know, other than being a beautiful country and having lots of potential, don't want to live there.
Yeah, I just want to switch gears a little bit. We've had a little bit of a, well, you know, decent pullback in the dollar, Dale. And
Oh, yeah, here.
yeah, okay. So you're going to get there. So the trend hasn't been broken, but in nominal terms, would a weaker dollar, say we pull back to 95, 94, have impact on grain prices in a nominal way?
I think slightly. I think, you know, the whole dollar thing is one that when I look back at it, we'll go back here to, whoops, went too far. This graphic here, and it's one that I've kept around. It's about, I think about 2-3 months out of date here. But when you look at the dollar over a long history, you know, about every 16 years or so, you get a peak in the dollar. And the last peak we had back here was in 2002. This one right here. I think
Yeah. Okay.
And with that, you know, 18 probably would have been another peak at this point, you know, getting out to about here. So this whole pattern that we've got going in the dollar, I think is kind of interesting. In Elliott wave terms, when you look at the dollar, and this doesn't show the low we had back here in 2008, this graphic here, which is a weekly, we had another low in 11, but when we go from this low we had in 11, you know, you can get out a nice 1, 2, 3, 4, 5. And then you look at this whole break we had into the low we had in April of 2018, and you start to get a sense here that, you know, we ought to have another move up to match the move up we had out of the, whoops, went the wrong way. The move up we had out of this low back in 2008, because this looks like a 1, 2, this was a 3 and a 4 into the low we had back here. Summer months themselves, but this whole pattern here is starting to take up from an Elliott term, and one thing I'm kind of watching out for is maybe a failed fifth.
Okay, truncated one.
And do we have a much more negative move coming in the dollar at some point than any of us realize at this particular juncture? I'm kind of open to that, so it's going to be interesting, looking at this on what kind of move to the downside do we get in the dollar here temporarily.
Right.
You mentioned the 95 level. We'll go back to an old 38% retracement level off this
94-ish.
17 to 18 down there at 94.20.
Yeah.
If we get under 94, you start to build even a more negative look at the dollar for whatever reason. And I don't have a clue as to why. Maybe it's tied into the election coming up next year here in the U.S.
Yeah.
Who really knows? But it has a much more negative scenario. So I'm really kind of interested in this, and that this does have implications. But as I've told people over a lot of years, and here, let me go to this next slide, and and it shows the Brazilian real and the Argentine peso.
Yeah.
Now this is long term, starts back in January 14, and they're much more negative when you look at it. But look at the peso; it just continues to move lower at this point in time, and even the real has a weak undertone to it. So when you look at agriculturals, you don't specifically look at the dollar index itself, which I do watch it. But when you look at the dollar, roughly about 60% of most
Euro.
of the dollar indices are tied to Europe.
Yeah.
And with that, when you look at the agricultural market, yes, we have a big agricultural trade with Europe, but realistically, when you look at currency valuations in agriculture, you look at what's going on with the real, what's going on with the peso, what's going on with the Russian ruble, which I think is really important. And it has two ties. Number one, in wheat, because they've become the largest wheat exporter year in, year out in the world. And also the Russians, you look at the ruble because of the impact back in the crude oil market.
Right.
And overall, as you mentioned, where this whole conversation started, the Chinese. So you watch the yuan itself too, and try to keep a running track going there. And, the Chinese themselves, and one of the problems we're having in this trade dispute is that, they have been accused of manipulating currency values. In other words, trying to keep it cheap, both impact import, export, and the trade in the world.
Yeah, they said they wouldn't weaponize it, but it's been weaponized.
Oh, it has. It has. And, that's the one thing that you really work with. And the one background issue in all these currencies that I just wish I could get my arms around with the idea. When you go to Europe and when you go to Japan, it's negative interest rates.
Yeah.
And I sit here and I think about negative interest rates, and if you come at it from a quasi-Keynesian standpoint, you'd want to say, you really only have a chance to have negative interest rates when you're really in a massive global depression.
Right.
Or a country depression, to where I will pay somebody to hold my money for me.
How much will you pay me?
Yeah.
Yeah, I know. To me, it's like Rod Serling Financial Twilight Zone episode.
That would probably make a good episode too.
He couldn't have written what we're living through right now. You bring up rates, and I'd like to wrap it with this because, I know you specialize in grains, but you're a veteran market trader and watcher, Dale. Mm-hmm. And do you have any explanation, or what are your thoughts about what's happening in the overnight repo market, Fed funds market, that the Fed is injecting so much liquidity into that? Why are the banks paying up in this type of environment for overnight funds?
This gets into another thing here that I've had questions about for years too, and I tend not to be antagonistic to people in governmental institutions, but when I look around myself today in just everyday life, you really kind of wonder, are the inflation gauges that we use today really accurate? And I, not wanting to be a conspiracy theorist, I look at the government and I go, they've got a vested reason to keep inflation under control, basically because now all the Social Security recipients out there, one of which is me, we get an adjustment on our Social Security.
COLA. And it's not Pepsi-Cola.
Right.
You can't even buy a Pepsi-Cola with the increase.
Based upon that number itself. And so with that, you really have to wonder, is there something going on in the inflationary game that, isn't readily apparent if you look at the government data itself? That's one thing. That controls long rates. But we can look at the long rates where they are and being as low as they are. And then you look at the short rates, which, and you start looking at the yield curve and you're going, are the inflation numbers and the impact that they're having on the long rates out there really lower than they really arguably should be at this point? And so are we trying to keep interest rates held artificially low, or at least trying to hold them low? But again, government's got a vested interest in that because of the size of our deficit.
Right.
They don't want rates to go up, because if they have rates start going up, like let's say we had back in the 1970s, and getting a move up in the pace and rates like we had back then, that digs a hole in the government's budget real quick because of the amount of debt we have on the books. So, the overnight repo thing, you really kind of wonder, is money really as plentiful as everybody really wants to say? Because
I don't understand, why there's liquidity issues in an overnight rate.
I don't either, other than if you, and I don't have a rate chart on here, other than if you're really in an environment here where the supply of money out there in the overnight period, or let's say in the very short term here over the next week, is much tighter than what people really understand. Okay. Part of this can go back. I've read a couple of issues. Part of it goes back and may have to do with regulations that were put in place.
Oh, okay.
Back in the Dodd-Frank.
Okay. So, you have a quick take? Do you think we've turned the corner and we're in a bull market in grains, or this was just a bear market rally that we saw?
Yeah, I think in the short term here, and we'll just go over a couple of things quickly. When I look at beans here, and what we have is nearby weekly soybean futures. I can put up a cash chart too. I use a lot of price cycle stuff here. What you're seeing is 33 week. The standard's 32, but this measures out. The low we had back here in August looked like it was a 32-week low. So, it basically sets us up to where we probably are going to be somewhat weak looking out in here to this next 32-week low that's due somewhere around the middle of January.
Okay.
So I think at this point, what we've seen is a nice little bear market rally with a break that's still going to come. But when I look at the whole pattern here we've constructed the last couple of years, I really see a soybean market that wants to move higher. So my real thought and my real concern here at this point are the things that are going to unfold down in Brazil in particular this year that we really don't understand or appreciate yet. We started out a little dry. Now planting's getting about on pace at this point. But see, weather for them, you hit middle of December, and if it starts drying out, that has big repercussions for them down there. And so maybe the soybean market is telling us something, but right now, I think everybody has gotten ahead of themselves, gotten way too pessimistic as far as yield potential on soybeans, even though I think they're going to drop a little bit yet. I think that's still been exhausted, and we just don't have the upside energy. But I think we come back down here into the 840, 850 range again. And if we hold up somewhere around 850, which for whatever reason is some kind of a modern day price level that seems to hold, and if we'd go back over this last little high we had here at 950, then you start moving up into the $10.50 to $11 range real quickly. And you can say the same thing if you look down here at the corn market. And,
Yeah.
it has a pretty weak cycle in place here.
Yeah.
The last low here was really the low we had there in the middle part of June, had a nice big rally in it. And so we're due for a low out in there that comes back into somewhere around early February itself. So I think corn market's really still in this same bear market thing. And if you look at yield on corn, yeah, we'll probably come down a little bit. But I think a lot of the people in the industry are still too overly pessimistic on potential of the crop, because the reports you get from the country, and we're only about a third of the way through harvest, tell us that USDA is probably not that far out of the mix.
Okay. So interesting. So we're probably looking to buy some breaks later in the year. Some long-term basing going on here in corn and beans, Dale. I really appreciate you being here. The best way for people to follow you is on your Twitter handle, which is @grain_cycles, or is there another place they could go?
No, that's the easiest place to get. I'm just in the game of trying to finish up a website at this point, but they can always email me there at my email address too.
Okay. Well, let me know when you have the site up, and I'll invite you back, and we could talk about what you're showing there, and let people know that you have a storefront for your cycle work.
Right now, that's where I'm at, though, for now. You can go to Twitter, and I talk about
Okay.
it occasionally, as well as some other things.
Okay. Well, thank you for your time, Dale.
Hey, good talking to you.
Yeah. So really have a great fall trading season, and appreciate your insight and coming to edify people about what I think is a very important, as well as the Chinese aren't the only ones who think that food supply is important. You can't eat gold.
Yeah, and they aren't eating pork right now, and we didn't even
Yeah.
get into that.
Yeah. All right. Well, sushi it is, buddy.
All
And
right,
thanks very much, Dale.
talk to you later.
All right, buddy. Good
Bye.
hunting. All right, everyone. That's a wrap. We'll see everyone for Turnaround Tuesday. Good hunting the rest of the day. And remember, don't just count your pips, count your blessings. Thank you, everyone. See you tomorrow. Thank you, Dale.